Morning, everyone, and welcome to the panel called ESMification of ASIC. So today we've got Paul, Chris, Courtney, and Daniel. So I'm going to ask everyone a couple of questions just to get started, and then move through the various talking points that are mentioned in the agenda. So starting with you, Paul, tell us a little bit about what you do and your specialty areas.
Thanks, Sophie. Hi, everyone. So I'm a lawyer and act for, CFDs providers. And our firm does legal work, and it also does training and documents and licensing. So I guess we act for a lot of the CFDs sector and do commercial legal work. Yeah, that sounds pretty exciting, doesn't it? But that's probably enough from me.
Cool. And Chris, you were until recently CEO of Go Markets, but now you've started doing something else. So tell us a little bit about that.
Yes. Hi, Sophie. I'm currently working in an advisory capacity to the OTC Derivatives industry, I guess, and so I'm working with a number of different providers to essentially guide them through the challenging time in Australia.
Courtney, so you're CEO of MEX in Australia. Tell us a bit about MEX Group generally, where you're regulated. What's been a bit of the evolution?
Yeah, so we've got 7 licenses now. I obviously am responsible for the AU entity, MEX Exchange, but we operate globally as the broader multi-bank group. We've recently opened a branch in the DIC in Dubai, so we've got a pretty heavily focused plan for the MENA region, and our history has seen us evolve largely from a China domiciled entity to the broader Middle East and Europe focus areas.
And Daniel, you're at easyMarkets, so tell us a little bit about easyMarkets.
Thanks, Sophie, and great to be here, everyone. So easyMarkets is a retail FX and CFD brokerage. I'm the managing director for Asia Pacific. We are part of a global group, and the group has regulation in 2 other jurisdictions. One is Cyprus and the other is BVI. But my primary responsibility is the Australian market as well as Asia Pacific.
Great. So the recent news in Australia really is the product intervention order finally being released, or being released after such a long wait, when we weren't sure whether it was going to come and how it was going to look. So Courtney, maybe you can tell us a bit about what your initial planning stages have been and what your business is planning on doing in response to that, to the extent you can.
Sure, I think it's been a bit of a double punch for us, because we took pretty drastic action off the back of ASIC's mail out to us, the affected jurisdictions action. So last year, I think, spelled a trying time for our industry in Australia, and I think certainly it would be remiss of us to have not seen product intervention coming as it was. I think ASIC was always going to come out with it as they'd planned, and I think anyone that planned otherwise was probably a little too hopeful. So like everyone, we have a broad regulatory regime, and I think the last year has seen a number of licensees who perhaps didn't have offshore licensing pursuing that, and I think that has largely been a bit of a fail-safe for everyone to try and ensure that they have a viable business going forward. So we have an existing licensing regime, which has seen us been, I don't want to say unaffected, but we do have other options. And I think for the AU model, it's going to change significantly, because I think the product we're offering has changed significantly. And I think we have to look at a bit of a consideration on whether the retail client values the more stringent regulation and the afforded protection, so to speak, over a drastically different product, which I think it is.
Yeah. And Chris, with what you're doing, what are you seeing? Are you seeing a lot of people looking for offshore licensing? Do you have any views on offshore licensing?
Yeah, offshore licensing is the major theme at the moment, of course, and a lot of people we're late to the party, I guess, but we've probably seen most licensees at this point find their offshore contingencies. But we're also seeing, of course, the common theme at the moment, of course, is innovation as well. So it's important that that those overseas clients are obviously at some point given the opportunity to innovate to a jurisdiction of the licensee's choice, I guess. And so we're seeing that play out through the industry at the moment. And actually, most providers have probably done it in some capacity. But it's important that they get it right. And certainly the last thing that we're seeing at the moment is the sophisticated investor test, or the wholesale option being used to opt up their retail clients. So these are the three things that we're sort of seeing quite a lot at the moment.
What's your thoughts, Paul, across your client base?
Well, I'd agree with what Courtney and Chris have both said. I've seen that happen. A lot of clients are getting a lot of licenses, and it did all start last year, and with ASIC saying, you should only really have customers in Australia or customers where you're legally allowed to, and ASIC took a bit of a strict view on that, which I think has been challenged a bit, and ASIC hasn't really pushed back when ASIC's been challenged on the extra jurisdictional issues. So yeah, we're seeing lots of licenses. We've seen all this year and last year clients moving. Well, last year a lot of businesses moved certain clients to other licensees, and then that's caused a problem this year for two reasons. One is they kept their main mothership or at least a team here in Australia. And there was a court case that came out in the middle of the year that said, even if the provider is overseas, if you're providing support to them from Australia, that overseas entity might actually be caught by the Australian regime. So back offices are suddenly pulling overseas licensees in groups into the Australian regime. And nice to see Daniel back. Sorry, I was just imagining it would be like we were at a panel. Daniel, I just imagine if we were doing a panel and you just stood up and just walked off the stage. Now you're back. Welcome.
I'm back. No, there's a connection issue, but I think we're back now.
Excellent. So we're just talking about the trends, where we're seeing lots of licenses being held around the world, people going for lots of licenses, people repapering clients out of Australia. But what I was saying is there was a court case in the middle of the year. It's quite problematic if you've got your team here in Australia providing support to offshore licensees. So there's two problems. That was one that came up in the middle of the year. And the other one was with the product intervention order, which when it finally came out, it has such a wide jurisdictional reach. A lot of our clients are having problems with that. Even if the client has a license to provide services from a different jurisdiction, if there's a connection with Australia, the PIO, a literal interpretation, says that the product intervention order would apply to that overseas activity as well. So, yeah, this is really a hot issue at the moment. We're going deep into this issue for quite a few clients, and we'll be talking to ASIC about that tomorrow, actually.
Okay, great. And Daniel, at easyMarkets, have you given clients a choice to move jurisdictions or qualify as a wholesale client, and what's sort of the response that you're seeing from your clients?
We've certainly given the option for those clients who might be eligible to be wholesale clients or experienced traders to be deemed as such. But we're not actively looking to repaper clients offshore. So far, we've really our clients have been, so to this point, really not affected or not. I suppose it's a little bit too early to say the effect for the clients, given that the changes are still a few months away. But all in all, I think it's actually not a bad thing for the industry, in the sense that it will give protections to the retail clients who perhaps need them, and at the same time, perhaps raise the profile of FX as more of an investment to more serious traders and investors. So we don't view it necessarily as a negative.
And so, Paul, the other day I saw a presentation by ASIC where they said they'd had 50 applications for market making licenses, which is the broad category of licenses that FX brokers sit in. Have you seen any successful applications? And what do you think happened with those 50 applications?
Yeah, that's a big number, isn't it? Yeah. We haven't seen that many. So we have about 33 applications that we're helping clients with at the moment, and three of them are CFDs providers. We just got a CFDs license in June for a client. So we've got, I think we've got 3 on the go. One's pretty close to getting it, and the other 2 are early stages. We also got in July a market maker license, but it was for corporate FX. So they're not going to be doing they won't be doing CFDs. They'll be doing options, and so, but it's the same. It's essentially the same license. That was a bit easier to get. So we're talking a lot of people out of applying unless they have a pretty convincing business model, and so. Yeah, it's been slow. So I don't know. I'm seeing ASIC grant maybe 1 to 2 a year. They can't not grant them though. Like there's been myths over the years that they're not granting them. They don't have the statutory power to do that. They can only refuse one if they have a reason to believe that the applicant or its officers or the officers of its ultimate holding company aren't going to comply with the law or aren't fit and proper. And so, yeah, they can't actually say no, but they can take a really long time. So yeah, so I think it's slowed down, still open for business, just it's tricky. A lot of people are coming in other ways, or you know, there's a few, so that's pumping up the price of sale of licensees too, I guess. You know, a shell still pretty expensive, but because of other changes to the law, buying a company is hard. You've got to make it subject to change of control and a few other things. So yeah, it's tricky at the moment.
Courtney, so if you were speaking to someone who'd never been a CEO of a FX broker in Australia, what would you say to them about licensing and tips and tricks to be aware of when running an FX broker here?
First, I tell them don't do it. No, I'm joking. I'm joking. I think the key here is that you have to be forward thinking. Like I said, I think it's remiss of anyone that didn't see this coming. We showed cardinal, connections to the ESMification, if you will. So I think I would definitely say that it is necessary to have a number of plans, number of approaches, because we've been dealt a fair few blows, as I said earlier. I think there is a massive focus now, and I've seen a pretty considerable effort from ASIC to focus on granular detail when it comes to compliance in their recent sanctions. So I think operating a commercial business is, of course, as a CEO, your objective, but I think you've seen a number of organizations being picked out, not for the usual offshore presence and not much here. They're talking, conflicted remuneration, lack of training arrangements and things like that. So I think CEOs need to be very heavily across the compliance obligations, of which there are many, to run a business in our sector. And I think that's largely lost with some players, to be honest. And I think that's why we've seen some pretty notable names get some pretty heavy slaps on the wrist. So concise answer to the question is the broader knowledge about the compliance obligations to operate in this space, because they're hefty. These protections don't come without a lot of onerous work from an operative perspective.
Yeah. Daniel, your head entities over in Cyprus, has the Cypriot experience shaped the way your ASIC entity is run, or are they run quite separately?
They run, Sophie, though I must say that the Cypriot entity was able to obviously experience the ESMA changes years ago. So we've been able to use that as a bit of a template for what happened. And yeah, I would say that we're well prepared for this.
I'm sure the internet connection for their trading platform's a lot better than his internet connection at home. He'll be back, I'm sure. Okay, Chris, anything you want to add on licensing and compliance? Because I know it is one of your special topics.
Yeah, it's something I actually enjoy. It's funny because at various stages through my career, it's probably something I didn't give a thought to. And I think quickly in this industry, you realize that if you're going to survive your compliance and commercials, compliance and commercial aspects of the business work hand in hand. We're seeing this at the moment, like, people are in survival mode. They're doing things that they're being driven by compliance initiatives, whether it be they novate their clients offshore, the resources that a business puts to the compliance desk, it's materially larger than it was going back, say, 2004 when I first started out. It wasn't a big deal at all. It was an afterthought in many cases. And then from 2013, we saw a material change in a business reliance on a solid compliance structure, and the culture started to change for a lot of providers, which is a positive thing for the industry overall. But nonetheless, it's not easy. And I guess looking at other businesses and entities that I've been associated with over the years, I have noticed that that in many jurisdictions, it is also quite difficult. So in many cases, I guess Australia is playing catch up in many respects. Certainly, if you look at a jurisdiction like Cyprus, you've got all this red tape to cut through in order to do the simplest of tasks, which is a highly inefficient compliance regime. But I think what we're seeing in Australia is possibly a positive thing in the long term, notwithstanding the difficulty a lot of these businesses are going through at the moment.
Paul, Courtney mentioned conflicted remuneration. Have you seen much change in the way Forex brokers operate since that provision came in, and how are they dealing with that provision?
Yeah, so it came in July 2013, and I remember doing the business planning in January 2013 with my colleagues, and we thought we're going to get this big spike in requests for advice on conflicted rem, and it's just going to drop off a cliff on the 1st of July 2013. And because by then people have to comply, right? But anyway, that didn't happen. It actually kept going after the date that people had to comply, and it's still kept going. There's been a bit of case law. Obviously, ASIC's commenced proceedings, and it's all very public, against Forex CT here in Melbourne. And one of the allegations that ASIC made in their concise statement, it's still before the courts, so we don't know what the outcome will be, but they are alleging that the benefits that were paid by Forex CT to its sales staff were what's in Australian law called, as you referred to, conflicted remuneration. And that is basically a benefit that could reasonably be expected to influence the advice or choice of product that the sales person is talking about to a retail client. And so that law, sort of the brokers all came out with a position in 2013 about getting, written consent, and that's somehow this big carve out. And it's been made clear since then that that's not a solution. Getting the client to consent to paying a benefit is not enough. The recent case law that's come out, the allegations that ASIC has made is they think paying a bonus based on net deposits is conflicted rem. So I'll pay the salesperson a percentage of the net deposits that they can convince that customer to make into the platform. ASIC said ASIC thinks that's conflicted rem, and so that doesn't mean first deposits is safe. We think sometimes there's problems with that, but basically the idea of the law is to stop incentives being paid to salespeople. So that's the idea. So to address that issue, we've had more inquiries about it this year than last year, I think, probably because of the case law and some other action ASIC's taken, and they said they were going to focus on conflicted rem. So we're seeing, there's a whole lot of ways to deal with it. You can have a no advice model, which we all know if you've got affiliates, to try and say you're providing them a percentage of based on leads or something, and then not providing any advice is hard to police. And are they really not providing advice, these educators? Then you've got the wholesale client model. Well, that's really hard because means you can only approach wholesale clients, which includes sophisticated investors. And then you've got the client pays exemption, which requires disclosure, but also the client has to actually pay that commish to the advisor. And most brokers, when they see what actually paying it looks like, don't really want to do that. Then you've got balanced scorecards, which normally are not very balanced. I guess that's a bit of a problem. And then you've got ways to remunerate your staff, which are permissible, but it's really complicated. And these laws came in as a reaction to a collapse in the financial planning sector here in Australia. It was just when the law came out, it's like, oh, let's make it apply to everyone. So very long answer to your question, but yeah, we're seeing it is still a big issue.
And so based on your comment, because it's something that we get asked a lot, or a statement that gets said to us, which is, these laws weren't designed for us. They're designed for financial planners. But it's correct then to say they are applicable to Forex brokers, and that general principle is something that you think ASIC's trying to stamp out, the conflicted remuneration from Forex brokers?
Well, they've made it clear that they think it does apply to Forex brokers, because, their concise statement, which shows what their arguments are in the current federal court action, say that as well. They always, when the law came out, it included general advice, and the broking model, the CFD's margin FX industry has tried to lean on the general advice model in Australia, and it was always intended to apply to that model, but some industries managed to negotiate carve-outs, like the stockbroking industry. They managed to basically negotiate this huge carve-out that just didn't apply to them. But there was no equivalent lobbying done by the CFD sector at that time. I don't know if it would have been successful, but yeah, ASIC, the fact that ASIC's taking legal action is they're trying to make a point of it, I guess.
So Chris, Paul mentioned about the difficulties of introducing brokers. In your experience and in your advisory work, would you advise people setting up or trying to expand their brokerage that you can run a brokerage here without IBs? How would you suggest that they deal with the IB situation generally?
Well, it's very difficult, as we just discussed, about the conflicted remuneration aspects. And in my mind, there's two legs to this conflicted remuneration. There's, I guess, first of all, the remuneration that you pay your staff. And then secondly, there's business to business remuneration, or remuneration that one would expect to pay to an introducing broker. I'm not sure if that's the correct way of looking at it, but in the case of conflicted remuneration to staff, there are I guess there are various models that do work, and obviously paying discretionary bonuses and things like that can be of assistance, balance scorecards and all that sort of thing. But if you're looking at IB models, it's not necessarily the right time or place to be building a business on that in Australia. I think it's a rattlesnake, and perhaps, there's just not enough that we know about. I'm not aware of any particular case law specifically to do with payments from an AFSL to an AFSL in terms of conflicted remuneration. So, but what we do know is there's also two legs to the conflicted remuneration aspect, as Paul mentioned, and it's not as easy as just getting consent. So that, in my mind, unless something changes, it probably is not sufficient enough case to be running a business and IBs in Australia. Certainly, there's a lot of, I guess it can be quite lucrative to run these type of businesses in different jurisdictions. Many of the businesses that exist in Australia and elsewhere probably wouldn't have been so successful if not for introducing brokers, and there are a number of reasons for that. Obviously, when you're entering a new jurisdiction, say, for example, China was at some point the theme du jour, and you can't, well, initially you couldn't just plonk yourself down on the ground over there and get clients. You needed experts and talent on the ground. So in some jurisdictions, it's certainly worth it, but then there are a whole world of pain that comes with introducing brokers as well. Certainly, you're exposed to the outcome of what they're doing, which is a real problem. So it's generally the product and the partner is important to vet, and lastly, I think you're looking at things like payment providers, which are another real problem in today's world, where you've got you might have material demand coming from a particular jurisdiction, but the ability to supply that is limited by your ability to move payments, essentially, and that's been a real issue in some jurisdictions. So in short, Australia, no, and the rest of the world, certainly in this day and age when a lot of people are dealing with offshore entities, it proceed with care, I guess.
Courtney, so you've been doing this for a while. Since you got started in the industry, have you seen a shift in the origin of clients in terms of which countries and regions they're coming from? And have you seen a change in the demand from clients as to what they want from the product and what they want from your services and licensing generally, or has it been quite consistent?
No, I think we've seen change. Some has been catalysed by the market, but some has been catalysed by us, by virtue of limitation. So as I referred to earlier, we had to limit our scope of the jurisdictions in which we can accept clients of off the back of ASIC affected jurisdictions. So we almost limited ourselves. Now, that being said, our major markets were obviously the ones that we obtained the legal advice on. So we didn't see a major depletion, but I think China and how variant their approach is certainly something that has been a considerable focus of our business, and I think the market in general, to know that it may not be there tomorrow. The way that they can outlaw something so quickly means that you have to have a business that is able to sustain should the China market either be non-existent or certainly see a considerable depletion. That's not only from the regulatory perspective, but the Chinese residents getting money out. There's a number of different facets that make it difficult. We have obviously got the benefit, all operating here in Australia, the respect or even the PR benefit that comes with having an ASIC regulated entity. The considered afforded protection from a client perspective does a considerable amount of the legwork, I think, for all of us in the cell, if you will. And I think that was only amplified after client money rules came out, because it was almost like they're even more secure. I know I'm not supposed to use that word, but I think the product they're looking for as of March has changed. Now, whether they meet sophisticated or wholesale client parameters, especially after product value exception was deleted from our list, is one area of concern. But I think your average retail client is they're looking for a different product, in my opinion, and it's not the one we're going to be offering as of Q2 next year. I think it's really important as well from a licensee's perspective to really consider the risk-reward ratio for reclassifying a considerable part of your client base, because ASIC will see that in our client money reporting, and I think that they may well have some questions if we see a big push of reclassification, because they did the same off the back of client money. As soon as anyone started reclassifying for the benefit of the licensee, I think that again presented its issues to those that took pretty drastic measure.
Yeah. Daniel, welcome back. We see you have changed location, possibly even your clothes. I can't quite recall. Tell us a little bit about your business. Are you getting a lot of Asian clients, and are you operating with a lot of Asian IBs, or are you operating with a different region of target market?
Well, thank you, Sophie. I can assure you I didn't change clothes. I just moved to a better location in the house for internet connection. And just to assure everybody, the stability of our platform is far better than the stability of the internet that I'm experiencing at this point in time in a city, Sydney. So how about that? Look, that's it's a really good question. I think ESMification really saw this coming many years ago. In all the time I've been managing the business here in Asia Pacific, we've never onboarded Chinese clients to the Australian entity. We've always been focused more on the Australian market, plus also on the Singaporean and some other countries within Asia Pacific. I can definitely say that with certainty that when I began my career in CFD and FX broking probably 12 years ago, the primary focus was IBs. Building businesses, or building brokerages back then, the ones who did it best were those who had really functional and successful and profitable IB businesses or programs for IBs to partner up with and to build their business hand in hand with the brokerage. For us at ESMification, we don't have any IBs. We, a couple of years ago, decided, this is ESMification Asia Pacific, the business that I'm responsible for. We don't have any local IBs in Australia. There are IBs in China, but they're of course managed through a different entity based out of Europe. There certainly is demand still for IBs, but so far as our strategy, it's not really our focus in terms of the model that we're looking to grow the business within Australia. But I do know that other brokerages, they do rely on that model a lot more than perhaps we do.
Yeah. And while we've got you, tell us your thoughts on conflicted remuneration and how your business has dealt with that, because you probably have some experience of that coming out of the ESMA model. Have you been able to transport any models for paying your staff from the ESMA experience?
Yeah, most definitely. The conflicted remuneration changes in Australia obviously meant that we needed to alter the way in which we remunerated the staff to make sure that we weren't on the wrong side of those changes. So again, I'll go back to what I said before, that the ESMification business which I run, fortunately, has been able to learn a lot of lessons that were learned by the European business through those ESMA changes. So yeah, we don't pay obviously volume-based bonuses or anything along these lines as we once did, as many did in the industry. So the changes have been, I mean, I can really see the market is becoming a lot more geared towards the experienced traders, the high net worth traders, people who really understand the risks that they're taking here, and when they do want to trade in these leveraged and volatile markets. So again, I'll refer back to what I said before, these changes are orienting the way in which the client profile that we are going for, but and it is going to change the way we do business significantly, but not necessarily a bad thing, and certainly from the perspective of the inexperienced retail market, I think it's a good thing for them.
Paul, are you finding that your clients that have an ESMA presence are better able to deal with some of these changes coming out under ASIC, or do you feel that the response is pretty uniform across your client base, freaking out or not freaking out, or shock and horror? You're on mute.
I was the first one to do it. There we go. It's a good question. So yeah, what we see is our clients deal with it in Europe, and ASIC does look to Europe for inspiration when it's regulating openly. And so often, yeah, like even the target market determinations and design and distribution obligations that come into effect next year, a couple of years after what happened in Europe. Yeah, so normally they have sort of a starting point, but then I guess they'll say, is it the same? And it never is. Sure, the leverage in Australia might be the same, but yeah, so they know roughly what they're in for, but it's always a bit different, isn't it? Every country likes to do things better. That's what they think they're doing. And wouldn't it be nice if we all just had a passporting regime, a global passporting regime for some of these things? So yeah, I think, yes, they're not as shocked maybe because they've done it all before, but they still need to get the local context, and it's nearly always a bit different.
And are you seeing anyone throw the towel in, talking about packing up and leaving? There were sort of indications that that's what would happen, and licenses would go from a few million to $1 in value. Is that what you're seeing as the response at all?
Well, I mean, you're probably seeing it more than me, Sophie, in terms of in that space. So, I mean, I'd be interested in your views on that. I'm seeing them go for about the same
asking the
price.
questions.
I'm seeing them go for the same price they always have, bizarrely.
Yeah, that seems to be our view, and we certainly haven't seen anyone throwing the towel in. So possibly not the response that the buyers wanted or hoped for, but
yeah. There is one slight change. A purchase now, ASIC, well, you've got to tell ASIC there's a change of control, and they've got more powers to block a change in control. I haven't seen them use those powers. And then you've got the Foreign Investment Review Board have reduced their clearance. You got to get permission from them for any foreign investment. So any purchase now has to be subject to some pretty heavy conditions, like this isn't going ahead unless we get the okay from 2 different regulatory bodies. So I wonder if it doesn't seem to have affected the price. I don't know, but it's definitely made it slower. Yeah, interesting to see how that plays out.
yeah. Chris, do you have any observations on that based on the people you're dealing with, license values throwing the towel in, or demand coming into the market?
No, I haven't heard of anyone throwing the towel in. I mean, notwithstanding all the challenges and the compliance framework that needs to be applied, I think it's still a source of value for any major provider in terms of multi-jurisdictional provider. Anyone who's operating from Cyprus, has offshore entities, needs its primary entities to I guess to be the flagship in many respects, and Australia certainly has been that, and the UK as well. So I can imagine that as time goes by, that those who are serious will continue to attempt to jump into the Australian market, definitely.
Very good. Okay, Daniel, we've still got you, which is good. Tell us a little bit about just your general plans for 2021. Maybe try not to mention the word COVID, and what you're going to do with ESMaFication in Australia. You're on mute.
The second one to do it. We're looking to focus the business on the sophisticated clients, on more experienced traders. The ESMaFication business, which I took over 4 years ago, was one of the long-standing brokerages, in the sense that we're, I think, the 3rd licensee in the Australian market to offer retail FX and CFDs here in Australia. So we have a fairly extensive local book of clients, and the aim, of course, is going to be to to retain and to migrate across to the wholesale status those clients which are eligible, while at the same time looking to target in further into that market through some new initiatives which we'll be releasing in 2021. But I do agree with Courtney's comments previously that it certainly does present a sizable change to our previous profile of sort of retail vanilla client who comes into the market with let's say not necessarily a large deposit or a lot of experience, and they want to take a position on something which an opportunity which they see in the market. So after these changes, we will see, obviously, will provide less appeal to those clients. So the focus really does have to be more on those sophisticated and those larger clients, of which we do have many on the book, as I said, but we are going to look to bring more in.
Courtney, before we wrap up, what's the plan for you for 2021? Do you have plans like some of the other brokers in town to expand out your product offering, whether direct shares, more DMA, CFDs straight into the market, or cryptocurrency? Do you have something like that in the works?
Yeah, we are varying the offering. As Daniel said, we're varying our client profile of who we potentially target to, because it's going to be a different person. I think MEX, we've rolled out a pretty significant and onerous, much to the dismay of some of my colleagues, client suitability testing. So we've seen a weed out of your typical retail kind of jockeys. So I think the change for us is majorly around really servicing the people that, from their perspective, evaluate the afforded protections that come with Australia are worth the variance in product. I think there is absolutely a considerable portion, because I don't think, and correct me if I'm wrong, there's many people that are moving their client bases to, for want of a better term, tier 1 jurisdictions. They're all offshore. And if you get me on my soapbox, I'll say that's counterintuitive to ASIC's mandate. I don't understand, because they're moving clients, if they're affording protection to the retail client and everyone's offboarding them to a jurisdiction in which they're afforded to little to none. I think there's many things we could have done prior, but it's happened. And like I said, the benefit that we've all had is that if you saw it coming, you've already planned what you're doing, which is you've got a different offering. You're going to have to rely on other facets of your business, like client servicing and that quality, and then have a plan B for your commercial business and the typical product, the atypical product that the major portion of the retail client base is being used to.
Chris, do you think that the flow will be outbound forever, or do you think there'll be a blow up and there might be a turn in the market?
Well, that's quite possible, isn't it? If we do see some negative outcomes coming from this offshoring of clientele, it perhaps is going to negatively impact many offshore entities, and if people start to really question the protections in an offshore environment, so which is precisely a lot of our case against the product intervention. And most of us sort of warned that that it is perhaps a more prudent way to play the game if they were to lower leverage rates to a more acceptable and sustainable level. So yeah, I do think that that we could see some negative outcomes offshore, which may very well keep people onshore. Certainly Australian clients, and I haven't heard of any providers that are offshoring their Australian clients. I doubt that's happening. Well, I'm not quite sure, but it wouldn't be the best idea. And I think that that in time, it's a shame to see that some of those Aussie clients could be targeted from unscrupulous providers in offshore environments. So we'll see how it goes.
And Paul, final question. As part of your planning for 2021, can you give us some insights into what you and your colleagues are expecting to spend all the time on? And you're on mute.
Thank you. Well, we're expecting to see, I'm just trying to think of anything that's valuable to add. We're expecting to see people continue to invest really heavily in all of their compliance obligations, and what Courtney said, I think beefing up suitability. I was having a discussion with a client today, and they'd just done that too, because the external dispute resolution scheme in Australia is basically, well, my clients tell me they're really pushing complainants to look at suitability, which is a problem in itself, I think. But yeah, so a lot of client suitability issues. Appropriateness really is the word to describe next year, because that is sort of at the heart of the target market determinations that the sector is going to have to come out with. And it will be probably different to the European target market requirements, because I think they were criticised a bit as being too wide. They're so wide that they're not doing much. And so I think, yeah, I think that'll be a focus of next year. I think PI insurance might knock a few brokers out of the Australian market, because some are finding it hard to get insurance. And so we're doing a bit of work for some brokers on getting alternate arrangements to insurance, actually, because it's that hard. So there might be factors like that knocking people out as well. Yeah, but it's got to be a better year than this one. Well, I say that in terms of obviously work environments and things, but I know it's been a cracker year for the CFDs market and the margin FX market in terms of returns. So yeah, hopefully it's a good year for everyone in both regards.
Yeah. Okay. Well, it sounds like a varied year coming up. Before we wrap it up, any closing comments anyone wants to make about ESMA or ASIC or regulators in general?
We love ASIC.
We do.
We love that.
They keep us here. So, okay, well, thank you everyone. And a week before Christmas, have a great Christmas if you celebrate that. And I will look forward to talking more about ASIC in 2021, I'm sure.
Thanks, Sophie.
Thank you.
Thanks for the time.
Thanks, guys.
Merry Christmas, everyone.
Thank you. Thank you.